Good morning to the most incredible XRP army. I'm gonna waste no time, let's get right into the video. Let me tell you something that should absolutely make every single XRP holder sit up right now. If you're holding XRP or planning on getting any amount of XRP, you need to hear this. You need to hear this. If XRP is adopted at scale, it does not change crypto narratives. It rewires global finance. And that's the part most people are still sleeping on. This is not about price chatter, not about charts, not about social media hype. This is about what happens when an asset quietly becomes embedded into the back-end rails of money itself. What does this mean for anyone looking to get into crypto? These next moments could be absolutely huge. So I need you, the amazing viewers, kick back, get comfortable, smash the like and subscribe button. So this video reaches other legends just like you. Now, let's get right into the video. When you understand that, you stop asking whether XRP survives and start asking how large the system around it becomes. Stay locked in, because once you see how all these pieces connect, the conviction becomes structural, not emotional. The reason people like Jay Claver go all in on XRP is not because of a YouTube clip or a price target. It's because after years of stress testing the thesis, the conclusion keeps pointing in the same direction. XRP isn't competing to be another speculative asset. It's positioned to grease the rails of settlement across institutions, equity markets, derivatives, and global commerce. That distinction matters. Most crypto projects live or die on adoption fantasies. XRP spent over a decade integrating into real systems while retail was distracted by cycles and memes. That is why the conviction deepens over time instead of weakening. What separates long-term conviction from blind belief is the willingness to try to disprove yourself. Spending a year and a half actively trying to find flaws in the XRP thesis and failing to do so is not luck, it's process. Critical thinkers do not assume they are right. They assume they are missing something and go looking for it. When that process leads back to the same conclusion repeatedly, conviction hardens. XRP's strategic positioning, regulatory survivability, liquidity profile, and institutional relationships converge in a way that is extremely rare in crypto. Adoption at scale is not a retail event, it's an institutional migration. Banks, funds, clearinghouses, and market makers care about settlement speed, reliability, compliance, and cost. XRP checks those boxes in a way very few assets do. When institutions move value, they don't want friction, volatility, or uncertainty. They want infrastructure. XRP was built for that role from the beginning, and the last 13 years have been a slow march toward that moment, not a failure to launch. The time horizon matters more than the price. Consolidating into XRP in 2022 with a 4-year minimum thesis aligns with how real investments work, not how speculation works. The fact that significant upside has already occurred before the thesis window even fully matures is not the end of the story. It's confirmation that the trajectory is playing out early. Long-term investors don't panic when price moves sideways at $2 or $3 if the underlying system adoption continues to expand quietly underneath. When people throw around numbers like $10,000 or $100,000 per XRP, most listeners get stuck on the figure and miss the framework. The point is not the number. The point is the scale of value being settled. If XRP becomes a core settlement asset for global markets, valuation stops being retail-driven and starts being balance sheet-driven. Assets embedded into financial plumbing reprice differently than assets traded purely on exchanges. That's the mental shift most people haven't made yet. Institutional validation is not a headline event. It's a process. XRP ETFs launching, gaining traction, and sustaining inflows is part of that process. When multiple fund managers commit capital, infrastructure, and reputational risk, it signals confidence that goes far beyond speculation. Institutions don't deploy capital just to test vibes. They test frameworks, regulatory clarity, custody, liquidity, and scalability. XRP passing those filters repeatedly is the story, not whether price moves this week. The stablecoin angle is massively underappreciated. XRP being paired with its own native stablecoin adds a business layer that most chains lack. Stablecoins are not a side feature. They are the transactional backbone of on-chain finance. When you combine a public, independent verification network with a native stablecoin and institutional-grade settlement, you unlock entirely new categories of machine-to-machine and enterprise-level transactions. That's where scale truly explodes, not from retail clicking buy and sell buttons. Global expansion matters more than domestic noise. While regulatory battles played out in the United States, XRP continued building internationally. Asia, Europe, and other regions didn't pause. Institutions operating globally don't wait for one jurisdiction to get comfortable. They integrate where clarity exists and expand outward. That is why engagement with XRP infrastructure kept growing even during periods when headlines suggested stagnation. The network effect doesn't stop just because one regulator is loud. The conversation around ETFs misses a deeper signal. Reserving the XRP ticker years in advance required confidence that the asset would eventually meet regulatory and market requirements. That wasn't done reactively, it was done strategically. Institutions planned years ahead, not weeks. When you see those breadcrumbs in hindsight, they tell a story of patience and long-term positioning that retail rarely notices until it's obvious. Market structure legislation is the catalyst for acceleration, not creation. Once clarity exists, companies don't start from scratch. They scale what already works. That's where mergers and acquisitions come in. Building infrastructure from zero is slow and expensive. Acquiring proven crypto-native firms is faster. XRP and Ripple, sitting at the intersection of TradFi and crypto, makes them a natural hub for that activity. Infrastructure scarcity means the best rails get absorbed first. Tokenization amplifies everything. Once stocks, bonds, and other assets move on-chain at scale, settlement becomes the bottleneck. Speed, cost, and interoperability stop being nice-to-haves and become requirements. XRP's positioning as a bridge asset in that environment is why institutions pay attention. This isn't about replacing systems overnight. It's about upgrading them piece by piece until the old rails are no longer competitive. The idea that crypto only disrupts TradFi in one direction is outdated. The convergence is bilateral. Crypto native firms acquiring traditional infrastructure and traditional firms acquiring crypto infrastructure is how systems merge. That creates hybrid platforms capable of serving both worlds. XRP's role in that merger is not theoretical. It's already happening through acquisitions and partnerships that most people gloss over. Institutional warnings about first mover advantage should not be ignored. When leaders say that waiting makes re-entry harder, they're speaking from experience. Infrastructure markets lock in early winners. Once standards are set and rails are chosen, switching costs become massive. XRP being selected repeatedly across regions and products signals that it is becoming one of those standards, not just another option. Data confirms behavior. Sustained institutional inflows into XRP across every major region, even while other assets see outflows, is not coincidence. Professional capital votes with money, not tweets. When XRP products attract fresh capital dollar for dollar at rates far exceeding their market size, it reveals preference. Preference precedes repricing. Price is the last thing to react, not the first. Supply dynamics complete the picture. XRP being accumulated and moved off exchanges tightens availability. OTC desks absorb flow until they can't. Escrow releases are finite and controlled. Once demand exceeds those channels, price discovery accelerates rapidly. That's not hype, that's market mechanics. When liquidity meets constraint, repricing is unavoidable. If XRP adoption reaches full institutional scale, the conversation changes forever. It stops being about whether XRP belongs in crypto portfolios and starts being about whether portfolios can function without it. That transition is slow, quiet, and boring, right up until it isn't. By the time headlines scream, positioning opportunities are gone. This is why patience matters. The system is aligning. Regulation, infrastructure, institutional demand, tokenization, M&A, and global settlement needs. These things do not align by accident. They align because capital follows efficiency. XRP sits at the center of that efficiency push. Understanding that is what separates conviction from noise.